Hello and welcome back to another episode of The Mortgage Musketeer, where today we're going to be talking about the difference between your debt to income ratio and your assets. They are linked together, but they are distinctly separate. Okay, so one of the biggest things that I get asked all the time is, the fact that somebody has a large settlement and they think that that entitles them to buy a home. So if you have a lot of money or a lot of assets that have come in, or sometimes it's, hey, I've accumulated a lot, or I've inherited a lot, or I had some type of legal proceeding where I won a large settlement, now I've got a ton of money and I want to buy a home. So you have to understand that although that is important and you need assets, it is completely separate from your basic qualifying information. Your credit score, your debt to income ratio. So your debt versus your income. So if you don't make a lot of money and you have a large amount of debt, then you're still in a position where you don't qualify regardless of the amount of assets that you have. Or let's say that you've got, this one happens to me a lot, where I get somebody that has like a 520 to 550 credit score and they have $100,000 in the bank. Doesn't matter. All right, you still have to have a qualifying credit score. So a large amount of assets does not negate the fact that you don't have a credit-worthy credit score. So those are incredibly important things to understand, that all of those are different. It's not one or the other, or hey, I've got a lot of money, therefore they should give me a loan. It doesn't work like that. It's about your ability to repay. And the opposite is true. Like if you got a great credit score, you got a great debt to income ratio, but you have no assets, you can't buy a house either, right? You have to have all of it together. They're not one or the other, or pick and choose the qualifications. It's all of it. You need enough assets, and a lot of people think you need 20% down. You don't. You only need anywhere from 3 to 3.5% down, okay? You need to make enough money to offset your debt. So if you have accumulated a lot of debt, but you're not making enough money to offset that and the house payment, you're also not going to qualify, all right? All of it has to work in tandem. I hope this helps clarify. If you have any questions, leave comments below. And until next time, it's all for one and one for all.